Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk, obviously, in a way that makes sense for you. We have some great tools in that regard that we'll utilize within our sessions when we're on the web trader. And also those tools are available in the AvaTrade mobile app as well. And keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick from our main website, if you are trading via mobile and you've been using the MT4, MT5 mobile apps, you can trade from either MT4 or MT5 accounts from our AvaTrade mobile app as well. And you'll have the advanced functionalities that we're about to use in the web trader when trading on your MetaTrader accounts, if you trade on them from the AvaTrade mobile app or our web trader. So under the section AvaTrade app, you'll see there are links to take you to the app in the major app stores, or you can just search for AvaTrade Go in the app store itself and you'll find it. But what you'll find is the same functionality, the same trading tools, the signals, the market news, everything comes into the app, just like we will see in the web trader as we go through today's session. Now, if we log in from the upper right corner, we will be in the web trader platform. And again, this allows you to trade and switch between your MT4 accounts, MT5 accounts, and your live and demo accounts. Just in the upper right corner here, I can easily switch between all of my accounts from one interface without having to switch platforms or devices. Now, this session is focused on technical analysis, but we should always kind of consider a bit, at least, the fundamental news situation as well, because that can give you some idea about technical strategies that might make more sense, what direction you might prefer to find technical entry points and exit points on particular instruments. If you know there's big fundamental news, really what's been moving the markets a bit today. The U.S. had some jobs data that came out, and this is kind of a preemptive bit of data before the end of week non-farm payroll jobs data, which is a major announcement each month out of the U.S. So the jobs data today, referred to as ADP, Advanced Data Payroll, showed weaker job production than expected. And so the anticipation is maybe we'll see that on Friday as well. We will see. But the advanced data today that came out of the U.S. showed weaker job creation than expected. It was already expected to drop, and it dropped even further with this particular data release today than expected. So that created a weakening somewhat of the U.S. dollar after that data came out. And the equities seemed to respond positively with a surge upward as that data was released. And so you might say, why would weak jobs data, sounds like bad news, less hiring than expected. Why would that create optimism and a rise in the equities? By equities, I mean the stock market. The major indices and stocks seem to want to rise when there's weak jobs data out of the U.S. And, lately, it's been bad news is good news. And what I mean by that is the U.S. is in a situation where they've raised interest rates 10, 11 times over the past year and a half. And while they've frozen raising interest rates anymore, the anticipation is when will they be able to lower interest rates in the U.S.? And until the data, economically speaking, shows enough of a slowdown in the U.S., they just aren't in a hurry to lower interest rates back down because they're afraid then inflation will go back up. The point of raising interest rates so much in the U.S. and other places around the world was to bring down inflation that was out of hand. It was out of control, too high. By raising interest rates, that was meant to counter that and to bring prices back down by slowing the economy down a bit. And so the jobs data continued to be strong of any data out of the U.S. Even while other metrics were slowing, the jobs data remained very strong. And so When there's weak jobs data, the market seems to cheer that, thinking, well, that means maybe interest rates might come back down sooner than anticipated. And so then the markets tend to rise a bit in different sectors. And so that's kind of what happened today, although there was some mixed data there because there were some inflationary numbers that came out higher than expected. And so that kind of tempered the enthusiasm maybe, but that's kind of where we're at, a bit of choppy movement, a bit of excitement because of the lower than expected jobs data. And so we want to keep that in mind then as we go into our technical analysis. If we start looking, for example, at the technical signals in the platform, we want to keep in mind that we've just learned some new economic news that maybe wasn't known when those signals first came out. So we want to look at the signals with an educated eye and see if the signal is right for us in terms of entry point and directionality. Okay, and so what we can do then is pull up an instrument that you might be interested in, maybe gold. Okay, so if I click on the signal for gold, it loads in the order window and it's a buy signal. Okay, that kind of makes sense for what happened today. And so what I mean by that is, if the USD weakened a bit today after the lower than expected jobs numbers, then it makes sense that commodities could rise against the USD a bit easier. And if the anticipation as jobs numbers were weaker than expected, maybe the US will lower interest rates. Well, then the fear comes back that, well, then that could cause inflation to go right back up again. And what's the safe haven that people run to many times? If there's fear that the currency might weaken and that prices might rise, gold. And so it makes sense when there was the stock market cheering that, hey, interest rates could come down and up go stock prices, that creates fear of rising prices. And then we see gold go up against a weakening USD as well. And so we see it's already climbed from when the signal came out. Okay, the direction was dead on really with this signal. It hasn't reached the take profit yet. Okay, the take profit zone is up here. And by the way, these take profit prices, we'll pull up the chart and look at it, are based on resistance levels further back in time that we can't see in the order window here. But we do see the pivot line. It's sitting right on top of this old resistance, which should act as support now. And so the signal says you buy unless it drops below this pivot level. If it drops back below this support level, then they say it's a sell signal. But it doesn't look like right now it's trying to challenge the support level. It looks more like it's trying to rise towards the take profit suggestions. And if you were on this signal from earlier today, you'd already be in profit. It doesn't mean that it's too late to act on, but it's not as generous of an entry point as it would have been a few hours back. Okay, so let's get rid of some of these old lines I drew on the gold chart, and we'll take a look and see, where are those take profit lines, and are they far enough away that if you were trying to act on this signal, that you still could act on what we have here without being too close to the suggested take profit. And so we see this first resistance level, which is the suggested take profit, is around 23.65. And so we need larger candles to get to that price. So let's go to 1-day candles. And now I see 23.80, 23. Look at that right there. Okay, so 23.65 is right about here where I drew this line. And if you, like I said, you can't see the technical analysis on this little chart as to why was Trading Central saying you take profit here on the buy signal. But when we look at a larger chart and we draw the line exactly where this first take profit suggestion was on the signal, which is here, we can see that's exactly a resistance level on the 1-day candles. So we can go back a week or so, a little more than a week, and we see that this indeed is a resistance level from prior days on the 1-day candle chart. And so we see resistance and down exactly at 2365 or almost exactly at 2365. Okay. And so that spot then, because there was resistance in the past, they say if you're buying on this signal, that's a spot where you might think they take profit. Okay. So when you see these signals, trust me, there's technical analysis built into it. And if the fundamental news then makes sense, weakening USD, lower than expected jobs data, anticipation that maybe this Friday, the actual non-farm payroll jobs data might mimic that. And so maybe there's going to be a continued weakening of the USD leading up to those jobs numbers coming out, the non-farm payroll data on Friday. Okay, if that's your thought process, then you trust this signal more. Okay, had that jobs data come out better than expected today, I would look at this signal differently. I'd say the fundamental news is working against us, but here it's working with us. And we see it in the trend on the candles as well. But the question is, again, we're on one-day candles. Look at the rise. We're today such a distance up and so close to the first take profit that you have to consider. Where would I put my stop loss if I'm going to buy on this? And the pivot line is a good spot to consider, maybe just below that you'd put your stop loss, because this signal says if it drops below 2340, then you think about selling towards these support levels down lower. Okay, so if I still wanted to buy on this, I'm probably going to put my take profit somewhere up near the first resistance. And then my stop loss, I'm going to have to look at smaller candles, maybe 1 hour candles, and I'm looking at 2340 as the pivot line, which is here. Okay, 2340. See if I can get it exact. There, 2340 and a nickel. That's the pivot line. And you see that's an old resistance from the past where it tested and dropped and then became support here. Once it broke above, it tested and went up. Okay, so this is the first spot where if it breaks below, the signal says it's a downtrend then. Okay, now clearly, like I said, had you looked at this signal, say 1, 2 hours ago, this would be a much more opportunistic entry point, technically speaking. Okay. And so probably I would put a pending order on this rather than a market move. Why would I put a pending order? I still believe in the direction. I just don't like the entry point. Okay. And you might like the entry and think it'll keep going. And by all means, you can buy on it, right? If you think it'll reverse, you can sell. Okay. But what I see here is not as opportunistic of an entry point as what I'd like for the signal, but I trust the signal because the fundamentals seem to back it up and it confirmed an uptrend. Okay, so what I might do is go to the smaller candles, 30-minute maybe, 15-minute, and say, okay, where can I find a spot that I think this could pull back to? And it looks like maybe here. Okay, this is a spot that once it went up, it pulled back once and bounced, pulled back again and bounced. So if it pulls back a third time, maybe you're looking to get in at 2350 and get your stop loss down below 2340 and your take profit up at the first take profit, 2365. That way I'm $15 to my take profit and only $10 to get to my stop loss. So I have a better potential profit than risk by being a little patient to see if this will pull back some. And you could even look at spots further down, like here's another support resistance level. This is where it first started climbing today and it hit resistance, resistance, resistance and pushed down, resistance again, and then finally it broke above 2345, tested it once and bounced further. Okay, so if you're being even more careful with your entry point, but you still want to go with this signal, somewhere between 2350, which is the first support I see, and 2345 or so is the second support, maybe 2346. Okay, so I'll go with being conservative here and say I think it could pull back, but that the momentum is on the upside. If I can get an entry point around 2346 or so, which is this support level here that it broke through earlier, then maybe I go with this buy signal. And if it just keeps climbing, it's okay, I don't lose anything. Okay? And that's more of an art than a science. When it comes to determining where you're comfortable entering, what risk-reward ratio are you comfortable with? That's an individual choice. And certainly this could just keep rising. It didn't reach the first take profit level, let alone the second one. And so you could just go with a buy, or you could wait for a better entry point. Okay? If indeed you were wanting to buy, that is. So the other option is you could do both, right? You could say, okay, I'll do partial buy now, and I'll do part of it as a pending order in case it pushes down. That's an option as well. So let's do a double type of move where we diversify the risk stratification. So let's say I'm going to buy now with the signal, and because I don't like the entry point as much, maybe I'm going to use AvaProtect. I'm not going to put a stop loss because I'm afraid it might pull back right now. But leading into the jobs numbers on Friday, maybe I think it will keep climbing because there's anticipation now that those numbers might be worse than expected because the advanced data was worse than expected. But I know I could get caught in a pullback because it's not the best entry point after all the climbing it did. So maybe with this market move, I'm going to use AvaProtect. I'll protect it all the way through Friday's announcement. So I'm going to do 2 days protection expiring at my 5 p.m. Okay? So I'm protected all the way through the non-farm payroll. And if it goes my way, I could get a huge payout. Now I just need to adjust the trade size to be the amount I'm comfortable risking on the trade. The risk is the cost of the protection. So maybe I want to risk around 1% of my balance. So if I do half a lot, the cost of the protection is about 1% of my balance. Okay? And so you calculate what percent you like to risk per trade of your balance, and then the cost of the protection is your risk until the protection expires. So now I take a trade where I'm looking at my take profit could be much higher if I'm waiting 2 days. So my take profit, I'm not going to necessarily judge on that signal. I'm going to look at something larger, maybe 1 day candles. And I'm going to say, if this really goes my way on Friday, gold could push up to where it was just a couple weeks ago up here on the 1 day candle. So I'm talking 24 plus, 2400 plus. So 2420 would be before that resistance I just drew. So 2420, and the protection affords me the ability to be more patient. So for around 600-700 protection cost, I'm going after 3,200, 3,300 profit here. Okay, and so I can go ahead and buy on that now. Okay, this is based on fundamentals and also technicals. Longer term move with a couple days protection. Now I can also go back and say, you know what? That signal was interesting too. And let's bring up the signal again. And we'll use the signal for that short term move. Okay, and remember we drew those lines. Let's go back to the smaller candles. We drew those lines here that there are some support levels if this pulls back. And the support level we kind of liked maybe was the second one down. If it pulls back to 23.46 or so, then to buy on this signal here. So if it pulls back closer to the pivot level, but not all the way to it, then a short-term move to take profit at these take profit suggestions. Okay, so now I've diversified my trading strategy, risk management wise, and one's a short-term move, one's a longer-term move, but they're both based on the technical setup, okay, combined with the fundamental news situation. So now I say take profit was up here. If we go to, what was it, 1 day candles, we could see, remember we drew that the resistance on the signal was right around here at 23.65. Okay, that's where that first take profit suggestion was on the signals, and the second one was at the next resistance level here. So the take profit zone was here on the signals. But because we're so close to the take profit, we're doing a pending order. Execute when price hits. If it does drop to 23.46. We saw, let's say 23.47. If it drops to 23.47, whoops, entry price 23.47, not my take profit. 23.47, take profit up at 23.65. Okay, that's the first resistance level in the signal. Entry price down at the support level that we drew from the 15-minute candles. So entry 23.47. Remember, that was here. That's this support level down here. We've one support level, second support level from the 15-minute candles. So this is the one we chose as our entry price on the pending order, if indeed it pulls back. And then take profit is that first take profit level from the signal, 23.65. So up about $18. And the stop loss should be below the pivot line, because the signal says if it drops below the pivot line, then you should be selling, not buying. So the pivot was down around 23.40. So maybe we say 23.37 to be $10 down from our entry. Okay, so risking 4,000 to try and make 7,200. I like that ratio now. If it pulls back, we get a better price to trade on that signal. Okay, if it keeps climbing, we're in on the market move with AvaProtect as well. All right. And so now I adjust my trade size again to be the amount of risk that I want. With one lot, I'm risking 1,000. So I need like 0.65 to risk around 1% of my balance. Okay, risking 650, balance 65,000 or so. So it's about 1% risk, going after near 2%, a little less than that, potential profit. And the reason you can have a better risk-reward ratio is because we're being patient to see if this will pull back to a more opportunistic entry point for this signal, which was a buy signal. I think it could just keep climbing, but we've already gotten in on that as well with the first trade that we simulated. Okay, so kind of a double move. We based it off of first understanding the fundamental news situation. All right, and by the way, you can check that right here. Okay, you can go to the economic calendar and you can see, well, if I'm looking to trade, what were the big announcements today? And I can look and see that right here. Which ones were high-level announcements? Which ones involved the country that I'm trading on? And we see that factory orders came in at a certain level out of the U.S. and on with the different announcements that came in. So you can find that information right here in the platform. And that economic calendar, if you tune into my fundamental analysis webinars, that economic calendar, you can also look at the past announcements and see, well, which way did the market move if it came in a certain way? And then you can get some data-driven trading ideas as well, and that can help support trading on the signals at the same time. Okay, but we can see the economic data that comes in that can help form your opinion as to which direction you think makes more sense fundamentally, which way is the wind blowing, and then you use the signals to help you with the support, the resistance levels that are outlined within the signals, and for directionality as well, to see if it makes sense to trade in the direction of that signal. All right, and then what we did was diversify the risk management using with one a stop loss on a pending order as the risk management part, and the other AvaProtect with a market move. Okay, and diversifying really the time frame that we're looking on each of those trades as well, where one is out through Friday with 2 days protection with a longer distance to the take profit, and the other is more of a scalping type move with the signal with a short distance to the stop loss and take profit. But we didn't do a market move on that one. We could have if we looked at it a few hours earlier, but because it had already moved well into profit from when the signal was sent out, we're kind of stuck waiting to see if it'll come back to a spot maybe that you prefer to enter. Any questions at this point? I don't see any popping up in the question chat box, but I'll pause for a moment. Okay, and if I see any questions pop up, I'll address them as I see them. So if you're not familiar with the platform, you can take a look at your market moves here. the positions area, okay, and your pending orders here. And so you see the trigger price. If it drops to that price, then we'd be in on the pending order. Okay, so we can look at some other instruments. And so we could switch to the equities. We'll look at maybe the US 500. And we can see here the surge up. This was after the jobs data. You see the surge in the US 500. It was very similar, even if you're looking at other regions, other countries, whether it was the German 40 or the FTSE, the stocks globally really reacted to the fact that jobs data was lower than expected, and maybe that's a good sign for inflation in general in the US and other places as well. And so we see the US 500 continuing its bounce. It surged up, pulled back expectedly after such a rise, and now it looks like it's trying to bounce up again here on the US 500. And so what we could do is say, well, what's the signal? All right, is there a signal first? Not everything has a signal, but the US 500 does. We can take a look. It's a buy signal. Okay, again, you'd already be in profit on this signal. Looks like the signals were pretty solid today with the directionality. Maybe the distance was off so far. It has not reached the resistance levels for the take profits. Perhaps it still will, but it kind of fizzled out about 3/4 of the way to the take profit. Doesn't mean you couldn't manually close it. If your take profit was programmed up here, you could have already closed in a nice profit. I think it may still make it there. Okay, we see it's looking like it wants to continue climbing, and perhaps gold will do the same thing and not pull back to our pending order. We'll see. But it looks like this might try to challenge these resistance levels up here, and the fundamental news seems to be on our side. So again, rinse and repeat. In terms of the strategies we just did, you could do the same thing with the US 500, trading with the direction of this signal if you wish. The only difference here is on the US 500, we don't have the ability to use AvaProtect. It's only on gold, silver, and FX pairings that we have AvaProtect. But you still could do a market move with this signal if you think that this will continue to push up, and use that signal for where you would put your stop loss and your take profit. And again, let me bring the signal up. I should have done that while it was there. We can draw the lines for where's the pivot, okay? Pivot level is down at 53.10. That's right here. Okay, we already have a line down there actually. Okay, 53.10 here, that's the pivot level, and you see why this is the pivot level. This is where you have resistance and support. Okay, that's an important price level. It was like a snake at this price, trying to decide, will it break the support or break the resistance? Will it go up or down? Finally, it bounced and went up. Okay, you see this was the support level here that it had trouble going below. And so if it drops below here, they're saying it's no longer a buy signal. But look at where they were telling you to enter. It was here. That's when the signal came out. And look at the profit you'd already be in. Now, has it reached 53.60? Not yet. So, we can go to the 2-hour candles. We can go to the 1 day or 4-hour candles. And now we can say, okay, where is that first take profit suggestion? 53.60. That's right here. Okay, this is the first line here, 53.60, where they're saying you might take profit. That's here, 53.60. We're not there yet. If it breaks the high that it reached today, it could be off and running. And you see, why is this the first take profit suggestion? Follow it across. There's resistance right here. In the past, it had trouble breaking above this area and then plunged back down. Okay, so this is the first area where they say you might take profit. The next spot is 53.86, which is up a bit higher. 53.86 is right about there. And if we go to 1 day candles, we might see why. Let's get rid of some of these old lines. It's bringing back some old webinar lines when we go to the larger candles. Okay, so 53.60, this is our first take profit, and 53.86, this is the second one. If we follow it across, we may have to go to 1 week candles to see why 53.86 was chosen as a take profit. There's no resistance on this upper line that I drew. You see here? Why? It's an all-time high. So that makes sense why we can't find resistance for that second take profit level. It's an all-time high. So what they did was go a certain percent above the last resistance level and say that that might be a spot where you take profit because it's in a nice percent profit. There's no resistance up above the 53.60 because we're getting into all-time high territory, and we see that on the 1 week candles. There's nothing above there. We've reached all-time high territory. So it may want to challenge the all-time high today. So if you're buying on this, stop loss below the pivot line down here, take profit somewhere between the first resistance and the all-time high that they think it could reach, 53.86. Okay. Again, it's not the most opportunistic entry point, but it does look like it's got momentum, like it's trying to continue climbing. So with the wind at your back, this could be a move that, since it didn't hit the take profit marks of the signal, that you still might buy on, even though it's not the most opportunistic entry point, as if, as it would have been had you looked at it a few hours ago. Okay. And so easy to buy on it. You just do this. You put your take profit up at whatever level you wanted from those two suggested take profits. Put your stop loss maybe down below the pivot, and it'll calculate for you your take profit amount, potential profit, and what you're risking to get below that pivot level. Okay. All right. Any questions, comments? I think this is a good place to stop. I don't see questions popping up. I must have been clear. Looks like everyone who logged in stayed for the session, so that's good. I'll leave you with this. I think there's a lot more movement to come today. And it seems to be building some momentum again, looking at this movement on the US 500. So I'd say if you like any of these signals we looked at and the technicals on them, there's some moves to be made, I think, that could pay out. Just be careful with your risk management and take the entry points that you're most comfortable with. All right, everybody, thank you for joining. Good luck with your trading the rest of the week. I'll be back at it with another session tomorrow, earlier in the day, 11 a.m. UK time, and we'll take a look at the fundamentals a bit closer, leading into the non-farm payrolls on Friday. All right, everybody, thank you for joining, and good luck with your trading.